Welcome to our deep dive into the economic showdown between the United States and Europe. Today we'll explore why the American economy seems to be outperforming its European counterpart. Let's unpack the data, examine the trends, and understand what's driving these differences. The most striking difference between the US and European economies is their growth rates. According to S&P Global Ratings, the U.S. economy is expected to expand by 2.7% in 2024 and 1.8% in 2025. In contrast, the European Commission's Autumn 2024 economic forecast projects real GDP growth in the EU at just 0.9% in 2024 and 1.5% in 2025. This growth gap is significant. The U.S. economy is not only growing faster, but also showing more resilience in the face of global challenges. But what's driving this difference? One key factor is the strength of the U.S. labor market. In November 2024, the U.S. added 227,000 jobs, surpassing expectations. The unemployment rate stood at 4.2%, which is historically low. Meanwhile, in the European Union, the unemployment rate was 5.9% in September 2024. While this represents an improvement from previous years, it's still significantly higher than the U.S. rate. The U.S. labor market's flexibility allows for quicker adjustments to economic shocks, which contributes to its overall economic resilience. Productivity is another area where the U.S. shines. In the third quarter of 2024, U.S. productivity reached an all-time high of 114.48 points. This represents a significant increase from previous quarters and years. Higher productivity means that American workers are producing more output per hour worked. This efficiency boost translates into stronger economic growth and higher living standards over time. The U.S. continues to lead in innovation and technology. While Europe has strong innovators, particularly in countries like Denmark and Sweden, the U.S. maintains a competitive edge in global technology. This leadership in tech and innovation contributes to higher productivity and economic growth. It also attracts investment and talent from around the world, further fueling the economic engine. If you're finding this comparison enlightening, please take a moment to like this video and subscribe to our channel. Your support helps us continue to bring you in-depth analyses of global economic trends. Now here's a question for you. Do you think Europe can close the gap with the US in terms of economic growth and innovation? What steps do you think European countries should take? Share your thoughts in the comments below. The US and Europe have taken different approaches to fiscal and monetary policy, especially in response to recent economic challenges. In the US, a combination of fiscal stimulus and accommodative monetary policy has helped support economic growth. The Federal Reserve's approach to interest rates and inflation has been a topic of much discussion. In Europe, fiscal policy has been more constrained, partly due to the complexities of coordinating policy across multiple countries in the Eurozone. The European Central Bank has also faced challenges in balancing the needs of different economies within the currency union. Consumer spending is a crucial driver of economic growth, and here too we see differences between the US and Europe. In the US, consumer spending has remained relatively robust. S&P Global Ratings projects consumer spending growth of 2.5% in 2024 and 2.2% in 2025. In Europe, consumer confidence has been more subdued. The European Commission notes that households have been reluctant to spend their extra income, partly due to lingering concerns about inflation and economic uncertainty. Investment is another area where the US seems to have an advantage. S&P Global Ratings forecasts equipment investment growth of 3% in 2024 and 4% in 2025 in the US. In Europe, investment has been more muted. The European Commission projects that investment in the EU will contract in 2024 before rebounding in 2025. The U.S. business climate, characterized by lower regulatory burdens in some sectors and a large, unified market, can be more conducive to business growth and investment. Despite its stronger performance, the U.S. economy isn't without challenges. Issues such as income inequality, healthcare costs, and long-term fiscal sustainability remain concerns. Europe, while facing slower growth, has strengths in areas like social safety nets, healthcare access, and efforts towards sustainable development. Looking ahead, both economies face similar challenges: aging populations, the need for sustainable growth, and adapting to technological changes and climate challenges. The U.S. economy's stronger performance can be attributed to a combination of factors: more flexible labor markets, higher productivity, leadership in innovation, robust consumer spending, and a favorable business climate. However, it's important to note that economic comparisons are complex. Both the U.S. and Europe have unique strengths and face distinct challenges. The goal for both should be sustainable, inclusive growth that improves the lives of all citizens. What do you think about these economic differences? Do you see the gap between the U.S. and European economies narrowing or widening in the coming years? Share your predictions in the comments section below. Thank you for joining us on this economic journey. If you found this analysis valuable, please like the video, subscribe to our channel, and hit the notification bell to stay updated on our latest economic insights. Until next time, keep watching the economic trends.